Hello everybody, so it is the 13th of February and I'm going to do a market analysis for today, a market session review. So yeah, lots of information as always, so stay to the end to get the most out of this recap, right? First, if you could just do me a massive favour, consider hitting the like and the subscribe. Does me a massive favour, does the channel favour, and also helps other people see this content. So we all are here to learn together, so yeah, your tick is greatly appreciated, right? So let's get into the meat and potatoes, and today I just want to cover something which has been taught recently, which is the new week opening gaps, new day opening gaps, and how to have them on your chart, alright? Because price uses those as levels, right? It oscillates between these levels, oscillates, what a word, right? So we have new week opening gaps, which is Friday close to Sunday's open, and you mark that gap out on your chart, right? And you do the last 4 weeks. So these you can see are the weekly opening gap prices, right? And then on my chart you'll see days, and these are new daily opening gaps, NDOGs. You've got NWOGs and NDOGs, right? NDOG, Snoop. But yeah, so you have these, you want to plot the last 7 NDOGs, right? I can't say that without making myself smile. So the last 7 days of NDOGs and the last 4 weeks of NWOGs, right? And price will bounce between these ranges. So you can see today we started at 2 weeks ago's new week opening gap. We ran up. This was this week's opening gap, right? So this was formed on Sunday, right, from Friday's close, and retraced back into the previous week's opening gap, and then ran up to the week prior's new week opening gap. So you can see how we played between these levels. So this is true support and resistance, right? And then the last 7 days we want to be plotting the new daily gaps, right? So this is Thursdays, this is Mondays, and this is Tuesdays, right? So how I was framing my trade, you would have seen that I put these posts out earlier in my Discord. I put some out on Twitter as well, I believe, and yes I did. And what I was targeting, so I know people were targeting this new weekly opening gap because of what ICT was saying, that it wouldn't, he didn't believe it was going to fill and then dump, right? My bias was slightly different, so I was bullish because I believe we were going to fill into a premium of this range, right? I didn't expect us to run up into this new weekly opening gap, but I did see us at least hitting this 22.35, right? So 23.50, sorry. So I want to talk through this. So if you just take this range, right, this is very, very simple stuff now. So this is the premium, this is the discount. We want price to run into a premium before heading down further. So I didn't see us rejecting off this level here, this new week opening gap, because I saw us running into a premium for potentially running lower in CPI if it wants to go that way, right? So now we've got that covered, let's jump into the lower time frames so we can break down today's action, right? So here we go. So you can see, let's go to the start of the day, right? So you can see here, this is the New York, not New York, so this is the midnight open price. So this is the true open price, right? And you can see that we rally up. We rally off the previous new week opening gap, right? So this goes way back when. So you need these plotted on your chart. So you can see it moves away. And what's it reaching for? It's reaching for the weekly gap that it formed, right? On Sunday and Friday and Sunday, right? So on Sunday it ran down to the previous weekly opening gap, and then at the open, so the New York open price, it rallied back up to this week's new week opening gap. So what do we know about new week opening gaps? We know that consequential encroachment of them are a sensitive point, right? It's where price is likely to magnet into. So we could be looking at that area for places for price to reject, right? And this is a trade that we had in the morning, right? And so in the pre-market session. So this is this is in the London session, right? So the way I was framing it is that we had, and this is where we start looking at balanced price range, right? So we had price run into the consequential encroachment of the new week opening gap of this week. Price then dipped down and rallied back up. We formed balanced price range. So you can see this balanced price range here. When price runs up and then runs down in exactly the same amount. That for me, that is, my eyes are immediately drawn to that as balanced price range, right? And I'm looking to see how price reacts around that. We can then see another candle runs up into this candle here. So this is now, and it has tested this balanced price range. So once balanced price range is tested once, I want to see it reject on the second run up to it, right? And this is where I'll be looking to take my entry short. So where you'll be looking to enter is off CE, so consequential encroachment of the balanced price range, once you've seen it tested and it's showing signs of weakness, right? So this then forms, quote unquote, resistance, right? So you can see price ran up into equilibrium of the balanced price range before rejecting hard, okay? And your stop could have been above consequence encroachment of the new weekly opening gap or above consequence encroachment of this wick, right? And you wouldn't want to see price run above that. And what was price running to? It ran down to the new DOG, NOOG, right? Snoop. It ran down to that, which was on Thursday, right? And headed to a tick, and then didn't want to break lower. So we can see consequence encroachment of that wick, right? So price then ran back up into the new week opening gap, right? So that was a trade in the London session, okay? We then get a run up into this level here, which is a 41.14, okay? And the same setup appears here as it does down in the London session, right? So we form equal highs, we have a fair value gap below, and what do we have in between? We've got this balanced price range, right? So balanced price range gets tested. We want to see weakness, we want to take entries of equilibrium of the balanced price range and have our stop above 50% of the wick, which is tested that wick, right? So that's our entry, stop above the top. In this instance, running down to fall back into the new weekly opening gap, right? One thing we know is that once price likes to run to is breaker blocks. So if sell side is purged or buy side is purged, price will like to run to a breaker, right? So you can see that price comes up multiple times and tests this balanced price range, okay? But your stop would have been safe because you would have set it above these highs, right? You would have set it above CE of this wick. And price runs down to the breaker block, right? The breaker block which was formed at 6.05, right? So you can see it's the highest up close candle in between a swing, right? And then you can see price tests it, then breaks through, comes back and runs away. This is a breaker block. Price likes to come back and retest breaker blocks, especially when, you know, price is running away from a certain level. Your eyes should be drawn to the next breaker. So then what I was framing, and I was talking this through in live, right? And so my bias was always to run up to 41.23. Reason being is that it was in a premium of this range, okay? And it was Monday's new day opening gap. So what day are we in today? Today is Monday. But this is previous Monday. So if we're trying to get true fair value, price is likely to run up to rebalance last Monday's price, right? So that was my draw. That was what I was targeting. So we have this balanced price range, and we can drag it across our chart, and we also have this breaker block. So this for me is the line in the sand. If price is showing willingness to break below this, I saw us, crashing back down into this new weekly open gap down at 40.50, right? But price at 9.36 holds, and it doesn't break through. So I'm looking for trades of this breaker to then run up to 23, right? And we get the price moves, we get this choppy price action here around this balanced price range. We've got balanced price range, so it gets stuck in between this range for a bit before breaking out, right? Price then runs back into the fair value gap before expanding higher. And then this is the next piece of price action I want to talk about. So this is the next week, new week opening gap, which was the ultimate draw for today's price action, right? So it ran from new weekly opening gap to new week opening gap, right? It skipped over 2, right? That was today's price action. So remember, new week opening gaps are magnets, okay? And they're going to get retested during the week. So this piece of price action here is a box setup, right? And so you should make a note of this because it's really, really key. And you see them on all time frames, right? But I do like them on the 1 minute. And what happens is you get a period of consolidation, and you'll get price wick out one end, wick out the other, and then retest the lows or the highs. So in this instance, it was a bullish box setup, right? So what do I mean by that? You have a period of consolidation, price runs out the sell side, runs out the buy side, and then retests the lows, right, of the consolidation. And you're looking for entries for it to run higher, okay? That is a bullish box setup, okay? So if you ever see price wick down, wick up, and then wick back in, you're looking for entries to be running off. And in this instance, it was off this order block, right? So that is a bullish, but the opposite is true if you're bearish. So it goes out the opposite direction of the first run out. So a bearish box setup would be if it ran the buy side first, ran the sell side, you'd look for something in here, in the highs, for it to reject off, and you'd be heading lower. So these are box setup, right? Really, really clear setup. So price then runs up, and what did I say previously? Consequence encroachment of a new weekly opening gap is the draw, right? So what's price run up to? It runs up to the consequence encroachment, rejects back into this box setup before expanding higher, right? We then get some choppy action through lunch that we don't touch, and we're looking at the 130 algo, right? So we're looking for lunch lows to be swept if we believe price is going to run higher. So this is the trade I took today. So price ran these equal lows, purged the sell side here, right? And then ran back up into this balanced price range. I was then looking at this as support. So you can see that on this candle here at 13.21, it held this balanced price range. It didn't show a willingness to run lower, okay? So this is a clear indication that price is strong and it's wanting to move higher, okay? So the target for me was to fill the new weekly opening gap, right? It was to fill the new weekly opening gap. Now, let's have a quick look. I'll pick that up. Have a quick look. Bear with me 1 second, guys. Bear with me 1 second. Right, so when I'm looking at implied ranges, I'm looking at what price can run to. Okay, so this is when we have a swing low, and we take the short-term low, and we take the width of that and expand it out. Right, this is potential profit targets. So if you're entering, you can use implied ranges or standard deviations for targets. Okay, and you're looking for confluence between them. So you're looking for long-term lows and interim-term lows, and then you're looking at the short-term low either side and measuring that out, right? And you're looking for two of them for confluence. So I have this price as 3 times implied move. However, I had taken my position off here, so I was out here, right? And then what happens? So price retraces back into what? Consequential encroachment of the new weekly opening gap, right? Before expanding higher. And then this is what I was talking about in live today. It's the 2 p.m. algo, right? And so what do we look at 2 p.m. if it hits a PD array? We're looking for it to run lunch lows, okay? So at 2 p.m. to a T, this is actually 2:01, it runs the PD array. And the PD array that we were looking at in this instance was consequential encroachment of this daily candle, right? So 50% of this daily candle, consequential encroachment, right? We also had these volume imbalances, right? So we had a volume imbalance here, right? And we had a volume imbalance between this one and this one, right? So these were levels. And price at 2 o'clock filled the volume imbalance, but it didn't fill consequential encroachment of this wick. So it was left open, right? So what I mean by that is, if consequential encroachment of this wick is still a potential target, it has the potential to run back and fill it later. And I was saying this in live today. So this ran up to 49.50, which filled the volume imbalance, but it left consequential encroachment of the wick open. However, at 2 o'clock, it did hit a PD array. Okay, and so it ran down, hit the sell side, took the sell side, and then we get a market structure break, right? So this is then a market structure break. Here, so this turns into MSS, market structure shift, right? What we're then looking for? We're then looking for price to return into a premium for it to head further on the basis that the 2 p.m. algo is heading lower. We take the sell side, we purge the sell side here, we get a market structure, here, we purge sell side, we're looking for price to run into a premium of this range. Okay, it doesn't get back up there. So then what are we looking for? If price is heavy, right, we are looking for consequential encroachment of the discount range to take another entry, right? So that would be our last entry to go short if price is heavy, right? And we can see that price fails consistently to get above. So this was another entry of mine to go lower, right? And what was I targeting? I was targeting, me personally, implied ranges, right? So I was trimming off on these, right? So I took this this swing. So this is a swing high, right? And I took this range, and I took an implied range out, and these are my levels where I was looking to trim. Okay, so an ultimate target, which was down here, but I was looking for confluences for me to go lower, right? So this is the long-term high, right? This is a short-term high. You measure the short-term high, right? So that's how you measure out to get confluences, right? So I believe I took, this was my other one here. So right, so I had confluences that it was to reach to these levels, right? And I took this, so I got out of here, and price ultimately then ran down and purged the sell side, which was sat here, right? So we had sell side running across these two, right? And price came down and purged it, right? It was called out in Discord by my fellow trader of who I appreciate, who noticed that this is an IFOD, right? Institutional entry order drill. So it's when a fair value gap gets tipped into, right? Dipped into and then runs away, right? So that actually coincided with this wick here. So you can see we get a purge of the buy side, and then price immediately runs away. Okay, that is IFOED, right? and price moves higher, targeting what? It was targeting the new weekly opening gap, which has disappeared off my chart. It was in this region, right? And this is this level here is the top of the new week opening gap, and it's the low of the new week opening gap. So it ran back up to fill it. You could have taken a short off this, which coincided with the 1050 algo, right? Running lower, and then price ran up. Ultimately, to do what? To fill in consequential encroachment of the daily wick. So that's where it ends up drawing today. And where has it left us? It's left us in the new weekly opening gap, right? That's where it has left us. So that's where we currently sit, in the new weekly opening gap. So yeah, I hope you found that video useful. And yeah, as always, hit the like and the subscribe. And yeah, until next time, trade safe, and I'll catch you on the next one. Take care. Bye now. Bye.